And good afternoon, folks. Just another update from us at the end of another week of markets. Flick across the calendar, as you can see here, not massively busy economic calendar in terms of the kind of more major economies, but we did have a interest rate decision out of the RBA and also an interest rate decision out of the Bank of Canada. The RBA hike interest rates for the second consecutive month, not just hiking interest rates, but hiking interest rates unexpectedly for the second consecutive meeting, right? Citing inflation troubles still being higher than anticipated. The monthly CPI indicator for Australia last month did come in higher than anticipated, a good 0.4% over what the forecast or consensus was. So inflation remaining a problem, inflation still remaining too high, while the labour market still remains okay, and they can't afford to continue to hike interest rates. Meeting before last, they suggested that they would be open to further tightening if necessary. They then did tighten further. They hiked interest rates by 25 basis points and kept to the same script. Further tightening would be necessary if inflation or data continued to suggest it was necessary. And then obviously you see CPI continues to rise in terms of the monthly figure in Australia. Therefore, another 25 basis point hike, and if that continues to happen, well, you can imagine they probably continue to hike. They have not completely closed the door on hiking again. So that monthly CPI indicator again for Australia next month, it is something we need to keep an eye on, and there's potentially some more tightening to come. We then move on to Wednesday. If I just click on the two-star, the medium impact after release, you can see here the Bank of Canada on Wednesday, again consensus 4.5%, actual 4.75%, hiking interest rates unexpectedly again. Now they had been on pause. They had said that they were not going to, or implied that they were not going to hike interest rates further unless necessary. Then obviously the question is what decides whether it's necessary or not. Higher than anticipated inflation, a pretty strong beat on inflation in the previous month, kind of obviously has made them hike interest rates. A 0.8% growth rate in terms of Q1 for the economy, which is what we have seen in Canada. So you got strong inflation, you got strong growth. We also have jobs markets today, jobs market or labour market figures out of Canada today. Wouldn't at all surprise me if we did see some sort of strong number. You'd have to imagine the Bank of Canada would know those numbers before, or kind of know the gist of those numbers before. But we have seen two surprise interest rate hikes. The RBA, higher levels of inflation than anticipated. We have had the Bank of Canada with higher inflation levels and also higher growth levels. So the economy is still performing okay. Other thing we had of note, just to keep an eye on, was this move lower in dollar Swiss yesterday. Which we did see the S&B chairman Jordan come out and suggest that further tightening would be appropriate when it came to the Swiss franc, obviously for the same reasons, inflation remaining high across the globe, and the S&B slightly turning hawkish yesterday evening. You can see yesterday afternoon, you can see big downside in dollar Swiss, which is obviously big upside then on the Swiss franc, which is replicated across the board no matter what currency pair you look at. So massive Swiss franc strength yesterday, which means three hawkish central banks within the week. The RBA hiking unexpectedly, the Bank of Canada hiking unexpectedly, and the S&B coming out and saying that further tightening is going to be necessary. So that begs the question for next week when we comes around to the Fed is, what do the Fed do then? Do they drip feed us a little bit of information before that? Or do we go into next meeting in an unexpected hike? The Fed do not like to do things that are unexpected. Markets have believed up until now that we will not get any sort of a hike, that they are likely to go on pause. But now after three central banks in a row turning hawkish, all central banks are hawkish, but all three central banks coming out, more hawkish than they previously were, when inflation still remaining sticky globally, it wouldn't at all surprise me to see an interest rate hike from the Fed next week. But that brings us on to some charts. You can see the S&P, the Dow Jones, Nasdaq had a bit of downside on Wednesday, and then it had a bit of upside and it's right back in the middle. You can see the Russell's the one with kind of clear direction, the Russell pushing higher, but the Russell did have some downside yesterday off the back of the highest jobless claims since October 2021. if I can find it. So I'm rocking it the wrong day. Initial jobless claims 261k versus a consensus of 235. So some pretty dire labour market figures yesterday. It did spark some downside in the Russell. Haven't seen much follow through of it just yet, but that is the highest number since October 2021, which does give the Fed a bit of a hand in terms of going on pause. But the labour market is not what they're focused on. Inflation is what they're focused on, and that still needs to be got under control. But the S&P, the Dow Jones sideways, the Nasdaq sideways to start the week, but then down and then back up. The DAX sideways, FTSE sideways. Nikkei is a bit of a mess at the moment. The VIX is the one thing that continues to cruise lower, though. We're below 14 at the moment. That still does not signal any sort of fear in markets. S&P 500 certainly showing no fears at the moment, as over the course of this week it has reached bull market or technical bull market territory, which is a 20% increase in the price of the stock index from those October 2022 lows. So positivity in markets over the last while. How long does that last, though, is the question. Clearly a lack of direction, and if there are further interest rate hikes the next meeting, and if they signal that they are prepared to tighten further, surely that sparks a bit of downside in stocks into next week. So I don't think a bit of downside in stocks is the worst place or the worst way to play it heading into next week. Again, 3 central banks, 2 hiking rates unexpectedly, one coming out as hawkish, coming out with some hawkish statements to say that further tightening will be necessary. Surely the Fed follows suit next week. That would then probably spark some downside in stocks, probably spark some upside in the dollar. There's a couple of trades that we need to look at, and certainly some opportunities that we can look to try and take advantage of. You can see 10-year yield pushing higher, 2-year yield pushing higher over the course of this week. That continues on into next week. An interest rate driven move should be positive for the dollar, negative for stocks, but we will have to cross that bridge when it comes to it next week. Another thing too, Bitcoin, a bit of downside in Bitcoin, a bit of downside in cryptocurrencies earlier on in the week. Charges being brought against Binance's CEO, and you know some regulations or some lawsuits being thrown at him, and being thrown at Binance. So something to keep an eye on the crypto space, but not really too much information out of that just yet. Clearly not much movement in the price of either of the assets, so maybe we'll pay a little bit more attention once they get moving. But personally, more focused around the kind of more mainstream assets rather than the cryptocurrencies, but just something to touch on if you are a trader of cryptocurrencies. Into next week, we'll have a quick flick into next week. So let me get the high impact data back. And what you can see is the Fed next week coupled with US inflation. Now the Fed, once it comes around to this, you'll have to imagine that they know these inflation prints before they make any sort of a decision. Pretty sure they'll have the decision made probably before this time, but we'll have to see how these figures come out. Now this will tie the Fed's hand if CPI comes out higher than, certainly in line with previous, maybe even higher than previous. Definitely ties their hands with some sort of an interest rate hike. See consensus 5.25, previous 5.25. So market consensus is for no interest rate hike, right? What then that means going forward into Wednesday probably decides this. So these inflation figures on Tuesday will be important numbers to keep an eye on. Once we can get a picture of how inflation is faring, then we'll know for sure as to what the Fed will do on Wednesday. So these numbers, need to keep an eye on them once we come in to the Fed on Wednesday. We get some fresh economic projections, some updated economic projections. It'll be interesting to see the dot plot where they see rates finishing by year end, by next year, and we'll see what they have to say for themselves. We've also got the ECB expected to hike interest rates by 25 basis points. We're expecting 350s in a row. One of these meetings was supposed to be a 50, but they have dampened expectations. The ECB, or not the ECB, sorry, the Eurozone as a whole has entered a technical recession as of yesterday. Let me go back here. Maybe we'll just go back and just have a quick look at the data itself. So we'll come over to here, right? Third estimate, the GDP, you can see the growth rate quarter over quarter, actual minus 0.1, previous minus 0.1. 2 consecutive quarters of negative growth means a technical recession, and that is what the Eurozone are in. So the ECB will not, or we will not want to continue to hiking interest rates aggressively. They will want to put a pause on it, you would imagine, at some point soon. But with inflation still high, they are in a pretty tricky position. So central banks in a difficult position at the moment. Inflation not coming down the way markets would, or the way they would hope. And if they had to keep hiking interest rates to cool that down, well, they're going to further pressure these economies, and that then presents some opportunities for us. Maybe some risk-off plays into next week might be the way to play it. But that's it from me then, folks. I'm going to wrap it up there. Please have a nice weekend. Please do switch off the batteries and get some rest and relaxation in, and enjoy the sun. Nice clear blue skies in London at the moment. 24-25 degrees today. Should be up at 30 degrees tomorrow. 29. We're expecting clear skies. Get out and enjoy the sun. But yeah, that's it from me then, folks. Enjoy your weekend, and I'll speak to you all again next week.